G'day, my name's Robert Gowdy, and in this video we're going to have a quick look at the market, have a look at the volatility, but from a investor psychology point of view, I want to suppose give some feedback of what I'm seeing when I'm chatting to my clients. Obviously the market has been down, in the Australian market at least, by 37%, and it's rebounded a bit from there. So I thought what we'd do is have a look at the graph, and clearly what clients are thinking about is the low point that has come and gone. Now, we could get further low points in the future, we just don't know. But it's the investor psychology to think, well, it's got down to 37% at one stage, and it's rebounded a bit. It might be a dead cat bounce, we don't know. It could be make us feel good before it goes down further than 37%. Who knows? We don't know what's ahead of us, but there was just this feeling when I'm chatting to my clients, and definitely encouraging them to continue to invest progressively, that, oh, we've missed it. The market has, gone ahead, and yeah, we've missed the opportunity. So what I'm keen to do here is just clearly show that no, it hasn't been missed, and the market has gone down a long way. So this is the All Ords, the Australian market. We can see the previous high, which is mid-February, not that long ago, less than a month ago. No, sorry, more than a month ago. But what we'll do, we'll just draw some lines that will give us the percentages as well. So if we start here at the top and we drag it down to the bottom, we can see that the low point is around that 37%. That was the low point of the All Ords very recently. And if we go from the bottom and we go up to its most recent jump, 15% thereabouts. So a pretty, again, sharp down. The volatility is extreme at the moment. The market doesn't know what to do with this virus. So very sharp down, sharp back up. But then if we go and have a look at where the market is now, and this is on the 3rd of April, and we look at, obviously the market's down 2.25% today. It was up 2% early, but it's now had a quite a big turnaround. You can see we are still around 30% down from the previous peak. So what I'm encouraging clients to think about is not this very short-term time frame, but if we look over longer time frame and say, right, in 3 years, 4 years, 5 years, I got no doubt we'll look back at this time here, and whether we bought right on the low or whether we bought it 30% down or 28% down from the peak, I've got no doubt if we take a longer term view and we can invest and hold and invest for the rest of our lives, which is what I encourage my clients to do, we've got no doubt that this will seem like really good buying. How quickly it recovers, these are the things we don't know. But I'm encouraging people not to focus on how low it's been, and sort of it means you don't do anything unless it gets back down to those levels. 30% down, I'm sure, is fine. When we look back in 5 years' time, we'll say that was cheap, that's an opportunity. Let's not wait for new lows, and potentially do it progressively, because we can't time this thing. It's impossible. So a little bit on investor psychology, and looking at the bigger picture. Whilst we're not at the low right now, and it's obviously tipping back down a little bit, it is still substantially cheaper than what it was prior, and there's plenty of opportunities there. Thanks for listening. Please subscribe to the channel if you haven't already done so. That'd be great, and we'll see you next week. Bye.